Hello everyone and welcome to Day Trader S&P 500. This is a rare Saturday evening broadcast, if you will. Don't know if I've done one on Saturday night before, but wanted to get you guys caught up, our YouTube subscribers caught up with what our newsletter subscribers have. We've got a few things we want to show you. I don't think I've shown this before. If I have, I apologize for repeating. And if I haven't, let's get it out there. Where is that? Let me see if I can find it here. The 5-year repeating pattern. Put that out on October 9th. But it's valid still because it's into the future. Anyway, we'll get into the auto trades in a little bit. There's our disclaimer. Here's a history of 5-year cycle ups, 5-year up cycles in years ending in 2 to years ending in 7, followed by a crash. It started in 1932. That move up from 32 to 37 after the crash in 1929 down to 1932. Anyway, these declines have followed at least a 38% decline or crash, if you will, and sometimes even more. It starts with the pattern from 1932 to 37, that 5-year bull market right there. Okay. And then after 5 years up, I'll just show you guys the chart here. There's a 29 crash, ended in 32. We had 5 years up into 1937. And then a decline of 61.8%, nice Fibonacci number there, into the 1942 low. So 5 years up, 5 years down. Okay, years ending in 2 to 7 on the way up. And then we have a 5-year decline of 61.8%. That was the first one I saw. Okay, and that was the 5-year bull market from 32 to 37. The next one is, and by the way, these are on presidential terms, like second. This one with Roosevelt was the second term, the second year of the third term. There's no 3-term presidents anymore, but they're all in second-term presidencies, and I think they're all, except for this one, in the third year. Let's see, we'll go here to 82 to 87, that 5-year bull market. That was the bookend of the 1932 to 37. You could call 1932 to 1937 wave 1 and 82 to 87 wave 5 bookends of the first and fifth waves, the beginning of the move up and the end, followed by the most historic crash in history. October 19, 1987, 20% in that one day alone. Okay, and the high to low move was over 40%. This was Reagan's third year of his second term, and here it is here. There's that 1982 to 1987 move up, and then boom, the crash, 20% crash in one day. High to low, it was 40.93, and Fibonacci 55 plus 1 days. Amazing how that works out, right? So there's that 5-year, and that's the bookend to the 1932 to 37, 1982 to 87. And here next we have George Bush's second term, okay? 5-year bull market, 2002 to 2007, and we had a 58% crash from high to low, okay? And that one went again to 2009. Okay, there was a 5-year bull market, 2002 to 2007. There's the 58% decline, and that was 2 years later. All these numbers are Fibonacci by no coincidence. Okay, and here we'll go projection in the future. Okay, Donald Trump's second term, third year. Okay, so far we have the 5 years up, 22 to 27. All these are ending in 2 and 7, the 5-year bull markets. Okay, and then it's not 2027 yet, so this is in the future. We'll see where it goes. If it keeps going up into 2027, we have a target. We'll get into our analysis in a little bit of 74.52 for the S&P cash. There's the declines if it hits that. Okay, that's off into the future a little bit. This is still 2025, although there's only 2 months left, November and December. So we'll see where that goes. Okay, the repeating pattern. We'll see how it plays out, but interesting to see. Okay, so that's that 5-year repeating pattern. 32 to 37, 82 to 87, 2002 to 2007, and so far we've got 2022 to possibly 2027. We'll see how that plays out. Okay, want to show you guys our most recent monthly report. There it is, a November monthly report. Let's scroll up. Yep, that's it. It's put out earlier today. Today's Saturday, November 1st. Here's our new triggers and targets auto trades. Okay, these systems here. I wanted to show you guys this. You can start auto trading with Striker Securities. Here's our most, let me see, yeah, here's our most recent trades. I think it goes back to 9/15, and here we are to the end of October, nearly 10,000 gain, $10,000 gain with all three systems combined. There's the micros, that's the E-minis, the ES, the E-minis, and then the financials, which are the 10-year Treasury notes. Okay, and here our ES just broke into the top 10 for a 3-month period. Okay, we got that right there. So we're happy to be in the top 10. We want to get the other ones up there, and we want to go for longer than 3 months. But just broke into the top 10 on these auto trades. You don't have to sit there and watch the markets all day. That's what I do, so I'll do that for you. System is auto trades. Developer is yours truly. The trading system is triggers and targets using Fibonacci extensions and ratios, and of course Elliott waves. Ryan Jones fixed ratio money management system. Limit our losses to 5% and build on the gains. By the way, that's my trading system here. Okay, you got to have a trading system. More importantly, you have to have a money management system. You can use whatever you want. This is the one I use, but I found over these decades the money management system is more important than the trading system. And what is more important than both of them is the discipline to stay within these systems. Some people don't have a system and they just lose money. 80% of all trading accounts go to zero because people run out of money. And there's some people who have systems, a trading system, but not a money management system, and they don't have the discipline to stay in their trading system and they blow their account. And there's some that have both, but you have to have the discipline to stay within your system. Otherwise, it's a casino and you're giving money away. Okay? How it works, you open a futures trading account with Striker. They're a futures broker. I am not. They make my trades in your account for your account with Striker. There's their information. Okay? So that's how that works. And I had Striker's information up here. Well, there's the link there and there's the link there. Okay, so without further ado, I want to show you guys one other thing here on let me get into our testimonials, because this will ring home to all you guys watching the YouTube videos. Okay, in the testimonials, we have lots of testimonials, different people. We have several 25 year plus subscribers now, but using this in different ways, 401ks and different things. There's the 401k account, and there's a big institution. There's somebody who's 770% increase. Anyway, I wanted to get to the point here is I like this one too. Willingness to make forecasts without the usual. It's going to do this or it's going to do that. But there's one to turn 25k into 89, into 112, and 131. But this is the one I wanted to show you guys in particular. Maybe it's at the bottom here. Here it is, Eric. Okay, I watch your YouTube videos religiously. On June 8th, 2025, you posted a video that included an analysis of XBI. Okay, it included my analysis. He purchased a December 115 call the following day. Now it's up over 700%. Expresses his gratitude, excellent videos. Okay, here's a dedicated, religiously watches my videos. I have to tell you guys, I've been doing this for what, 5 years at least, maybe longer. I've never done a YouTube video on XBI, and I don't know what possessed me to do it on that particular day, but I did. I just so happened to do it, and this guy just so happened to act on it, and who knows how much he has now. But I want to show you guys, XBI is in our getting a little bit off the track here, but it's in our, let me go back here to our home page. There we go. And it's in our video on demand, okay, subscription. We have Tesla, Bitcoin, SMH, and XBI. I update that once a month, okay? And we have other things we put in there, you know, trading advice and educational things and all kinds of stuff like that. But again, that was just uncanny how I put it in there one time and never did before and haven't since, okay? So anyway, wanted to get that to you guys, and I want to show you guys the one that we're doing for the auto trade systems, the bonds. It's a 10-year Treasury notes, okay? So this is the one we're trading now. I've got lots of different things on here, but that's what we're looking at there. That 5 may have been there. This hasn't been updated. Let's whoops, let's clone that guy, make him a 5. That looks like it's a 5 without doing any analysis, but I like to trade the 10-minute charts, okay? So that's the 10-year US T-note futures. That is part of the auto trades system. Okay, without further ado, let's get into that November monthly, pick up where we left off. Okay, there's all that information again, how that works. And top down, 30,000 feet, looking up from the 2009 low. There's that 58% decline we talked about earlier. Okay, we got a 1, and that is on the primary degree level. A 2, a 3, a 4th wave. Triangle, always out of a triangle. We thrust off of a triangle. The market will thrust in the direction that it was going before the triangle. So the market was going up. Here's a triangle, and here's the thrust out of the triangle, okay? And then from there, you see at intermediate degree, we have a wave 1 up, 2 down, 3 up, 4 down, 5 up. This is huge. Okay, that wave 1 high was 48.18. This wave 4 had to hold above it, okay, and it did. It almost hit right on the Fibonacci 50% retrace within 3 points out of almost 5,000, and now it's up in 5. We have 5 equals 1 at 74.52. Okay, we'll see if that plays out, but that's a monthly log chart of the S&P. And of course, whenever this 5th wave of intermediate degree is complete, it will complete the 5th wave of the circle, which is primary degree, which means the correction from there would be of all of this from the 2009 low, from 2,000 to 7,000. We'll do the math on that when we get there, okay? Here's something on the Fibonacci time spirals. Started in May. The next one, this is identifying lows. We'll just show you the chart here. Okay, these aren't significant lows. They're just temporary lows, if you will, but they provide an entry point to get the next move up. It starts with the May 23rd. Then there was a low on the 13th. Bang. Then there was a low on the 26th. Another one on the 17th. You can see all these lows are followed by moves up. The last one was October 14th, and we're up since then. And the next one in the cycle is January 11th. So we'll see how that goes, okay? Again, if this is to continue the trend, it'll mark a near-term low, but not a low of significance, something that's going to be huge decline. We'll see how it plays out. Okay, there's the verbiage on that. Then we went from monthly to weekly to hourly. From the April 7th low, we've got a 1, 2, 3, 4. 5 will be complete at 2 different degrees of trend. The one is 69.86 and the other is 69.82. And the high so far is 69.40. So we'll see how that plays out. There's a ton of gaps. I think 16 open gaps to be specific. So we'll see how this goes. When that one that was a monthly chart corrects, it'll close all these, but we got to wait for that larger degree of trend to be completed. This is a smaller degree of trend, obviously. Okay, steps needed to see it. By the way, the monthly subscribers get reports daily, and every day, literally every day for a long time, at least since the April low and before then, I've been checking the 1 minute and 10-minute charts for a sign of a change in trend. We've gotten through 4 steps, but not 5. Okay, but we look every day just to see. We'll know at the smallest degrees of trend, like the 1 minute and 10-minute charts, when this thing's turning, and they're fractals of each other. So it happens on a 1 minute and a 10-minute. Will also happen on an hourly, daily, weekly, monthly. Okay, obviously those would be much bigger degrees, but we're going to catch it at the smallest degree of trend when it happens. Not if, it will, just when. Okay, but we'll watch. We won't be surprised. It hasn't been a crash. We haven't missed a crash, and we won't miss the next one, or at least the bear market. 2 years, 1.5, 2.5. Okay, and here we have not received confirmation of a change in trend. Again, we look every day, but until we do, we're going to remain long. We're long on the short term, we're long on the intermediate term, and we're long on the long term against these most recent lows. On the longer term, going back to 2022, and here's the April, and there's the May 23rd. Okay, circuit breakers for when and if this thing goes down. You'll want to know those when it happens. We just keep them in there so everybody knows. Moving on to the NASDAQ, we're looking at the pandemic low from the year 2020. We have a series of 1s and 2s. We have a 1 up, 2 down, a 1 up, 2 down at different degrees of trend. And here are our targets. And so far the high is 24,019 on October 29th. You can see we have a 24,889 target and a 25,443 target. Okay, we'll see how that plays out. That would mark wave 3 at 2 different degrees of trend. Those are those wave 3 targets there. Okay, and this just explains all that. The Dow's blowing everything out. Okay, we've even recently, a month or so ago, changed our wave 3 count, our wave count at the intermediate degree of trend. We had a wave 5 target here, and this in red is the wave 3 extended. Okay, this is 3 here in blue, but if wave 3 extends, it's to there, and so far the high is even above that. So this 3 could be over here, then we'd still get a 4 down and a 5 up. So we'll see how that plays out. Again, we'll watch the smaller degree of trend charts, down to the 1 minute to see a change in trend, but this thing is just exceeding expectations to the upside, and this basically says that. Bond market, my favorite, obviously, for a long time. But here is the 10-year Treasury. All right, daily bars. These are the bonds. Okay, there was the wave 3 high. That came from the year 2020 pandemic low. Okay, and from there we've got a triangle. We've got an A, B, C, D, E. Again, for those of you who are new, when I first started charting hourly charts on the wall back in 1997 or 6, I believe it was, couldn't see 5 waves either way. I thought, boy, this Elliott wave, it's for the birds. It doesn't work. Doesn't make sense. And ended up seeing it was a triangle, and the thing burst out of the triangle. So the triangle was the first thing I learned by accident or mistake or luck. So it's hard to get a triangle by me because it's the first wave pattern I learned. For most, it's the hardest to trade. For me, I love trading the triangles because the market will go in a direction that it was heading in before the triangle. Okay, this one, the bigger picture is up because 3 is here and 4 is down here. But this is what we're looking at. Okay, this 4th wave low here, we're looking for a thrust higher. Again, a thrust out of the triangle. That's a trigger. The D wave is the next upside trigger. The high of wave B is the next upside trigger. And even though there's 1, 2, 3, 4, 5, 6 direct hits here, and this direct hit is to the 1,000th of a point. This is to 1/1,000th of a point. They're direct hits. They're pretty darn close. And we've got a lot more before this. So this is why I love trading the bond market. And that's why I started that triggers and targets with financials, because that's on the one I showed you, the ZN. Okay. And here's all the verbiage on that. And I think all those past targets and triggers. Gold, gold, gold. Here we go. Daily bar from that wave 4 low. Okay, that's back in 2023, late 2023. We have a 1, 2, 3. There's another triangle. Again, the triangles they're long and sideways, and there's ascending, descending, contracting, and expanding triangles, and this one is a contracting triangle. There's the thrust out of the triangle. That was the trigger to wave 3 high. You can see we got those moves up there. So far the high is on October 20th at 43.81. We have a higher upside target at 45.30. It looks like we got a correction here. I think I may get out the chart because I think this is a 1, 2, 3, 4 right here off of that wave 4 low. Okay, let's get into those charts and see. Let's see if we can get in there, and let's look at gold. I think I can break that down for you guys. See what we have here. Yeah, there's that wave 4 low. Where do I have it? Yeah, from there, let's get to, that's 10 minute. That might do. That might do, guys. 1, 2. Yeah, it's developing. Okay, that might be the end of that decline right there. Yeah, there's a 1, 2, 3, 4, 5. Yeah, it looks like it's developing. So that's about the lowest we can get on that. I want to get into the ES because we haven't really talked about it. Mostly the S&P cash. But there's that April 7th low. We're looking at a daily chart of the E-mini futures. There's 1 up, 2 down, 3 up, 4 down, and then here's 5. Okay, so we had a target here of 69.27, and it hit 69.52 on the 29th. The next Fibonacci upside target is 73.52.75. That's the E-mini futures there. I think we covered a lot. Let me go back over to the monthly, and there it is, and there's the gold, and leave you guys with our, don't want to make you too dizzy, I'm going pretty fast here. There's our figures and targets. Auto trades, again, we're happy to break into the top 10. We want to get in the bigger time frames, 3 months. I think they have 6 months and 1 year. And there's our trades, almost 10,000 since 9:15. You can see all the gains and losses there. Gains are in red, losses are, I'm sorry, gains are in green, losses are in red, as always. All right, so that's it there. We hope to build on that. And again, that I'm still kind of amazed. I did XBI once in what, 5 to 10 years, and the guy acted on it and made what, a 700% gain. Who knows what it is now? Okay, that's it. Well, hold on. Let's look at XBI while we're here. Okay, let's just see what it's doing. Bear with me a second here. XBI's got to be on here somewhere. There. No, US 10-year. Come on. There it is. XBI. Okay. Let's get rid of this. Let's do something bigger than 10 minutes. Bear with me here. Yeah, there's our, I'll undo. My apologies while I try to adjust this. Yeah, there's our XBI there. Okay. Yeah. This will be better. Yeah, here we go. We got a 1, 2, and then a 1, 2. Yeah, series of 1s and 2s. So this guy caught wave 3 of 3 of 3. And once the market went above this wave 1 high, which it did right here, that verified that the trend is up. This low held, the 61.78 held, the 63.80 held, barely, because you can see these lows are barely above the previous ones. That's a pretty big, that's definitely more than the 786. But we made a higher high, and then we made another higher high. So we're in wave 3 of 3 of 3. And you can see our targets there. We got a 118.60 and a 152.47. And there was that 118, and the other one is 120.86. That's 2 different degrees of trend. I'll put this over here, put this over here. We got these all sitting here. So we've got a 1 in black in parentheses. These are small. A 2 in black in parentheses. Then we've got a 1 in red and a 2 in red. And there's the 3 in red target at 120.86. So that's what this guy, who watches the videos, acted on, and it worked. So now this is the second time I've shown XBI in over 5 years of YouTube videos. Okay, that'll do it for this time. Until next time, take care, everyone.